The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, I hope you're hungry because this week we've got two aggressive growth names that are in the food space, and we're going to start with SunOpta, and it's STKL. Almost seems like St. Louis when I say that, but no, it's not. It's even better than St. Louis. If you can imagine that, it's SunOpta. It's a Zacks rank number 1, and that's a strong buy. An A for growth, as we like to see in all of these aggressive growth videos, and a C for value. Normally, we like to see something like that, divergence there between the two of them, because we know that growth investors and value investors are seeking different things in general. So let's go down and take a look at it's the SunOpta food group, organic foods. That's what we're talking about here, organic foods. I thought these were chips for some reason, but who knows? Let's go to the stuff that's really important here, and it's the numbers. Because at the end of the day, they could be selling anything. If their numbers were bad, it would stink. But if their numbers were great, we'd be definitely worthy of giving them a deeper look, and that's what all these videos are really about. So mega beat here, a meat. This actually is a beat because they 2 cents when we're looking for break even. So that should be like a 200% beat. 200. There you go. I did it for you. Looking for a loss, posting a gain here. That is nice. That gives you a check plus to me. That's a check plus. So that number is huge. So what are they doing? They are crushing the number. That's what we can conservatively call that. Where are the numbers then? Should be your next question. Well, they're flat here for this quarter, looking at a loss again. They were looking for a loss down here. I don't know if you can see that again anymore. This number kind of went the wrong way. That went the wrong way from a penny to break even. But this number, ooh yeah, 1 cent to 7 cents. I like that. And then next year we're going to kick it up just a penny. But keep in mind, we've been beating the number pretty good. So, that's what we have to think about that. So let's, our growth in food, we're going to look at 7% this year, 11% next. You got to wonder how much inflation is playing into that on that top line end. We know that it's a consistent thing inside the food space. So we're only earning very small pennies, so we're going to have a gigantic forward earnings multiple. Boy, oh boy, we're showing contraction last quarter. That's interesting. Price to book, very nice and low. That should keep the value investors interested. Say that 6 times really fast. And price to sales, we like to get that number just to about 1. Let's see our operating margins. Ooh, baby, like to see that. Like to see that. So let's go take a look at the chart, and we'll see that this is one of those names that survived that whole downturn back there and that pandemic stuff, and then ran up, and then came in, and then popped up, and then is kind of settling here. Our estimates are kind of trending this kind of way. But the idea that I'm going to express here and why I think that this works is because while there was a downturn here, like in this estimate, and that's going to keep this stock kind of in this trading range where a lot of things are now, what we are seeing is the bump up, right? And then what we need to see, because right here, when you don't have this line firmly ahead of this line, you're going to be in that range. You're going to be in that trading range, and it's really in tune with this line. So we need to break up and break out, and break up and break out is right there. There's the start of the break up and break out. If we can get this number to go whoopity doop like that, this stock breaks out and runs to new highs, and that means over 16, and this is an $8 stock. It's a 100% winner. If we can get that EPS number to about 20 cents. 20 cents. Okay, so keep that one on your radar screen. It's SunOpta, STKL. That could be a big winner if earnings keep coming in strong. Okay. Let's jump to our next wonderful idea that we want to. Oh, and it's Celsius. How about that? Brian is just that type of guy where he is talking about food. He's going to give you 2 food stocks, and it's Celsius. CELH is the ticker. Zacks rank #1 strong buy, A for growth, F for value. That makes me smile because what do we call that? We call that mega growth divergence there. I'll put a little nose on my face there. That's a smile. Woof. I am not an artist. No chance of me selling a Picasso or buying one for that matter. Boy, look out here. Looky outy here. That is a chart that dreams are made of, baby. Dreams. Let's go figure out what is happening with Celsius. Now, this is that beverage thing. I want to call these like I don't know. I don't know the name. I guess they're called Celsius drinks, but they've got super caffeinated things, I think. And it's kind of like the Red Bull. The kids are drinking this instead of Red Bull because it's just it's super powerful or something like that. All right, so a nice beat. Here is a dramatic miss, and there's got to be something with that because that's ridiculous. And then here we've got a good beat. That's a solid beat, and then another solid beat. So we've got that one quarter that's really skewing the average. So we would want to really flesh that one out, but what we really care about is the future, not the past when we're thinking about investing in any stock. So we look at the future. This quarter, 27 to 31, we like it. 35 to 39, we like it. 107 to 139, we really like it. And 185 to 230, boy, oh boy, Celsius. Whew, that's hot. Celsius is hot. Let's take a look at our sales. Where are they going? Oh, yeah, baby. Sales are trending higher. You're going to pay for this growth, though. You are going to pay for this growth. What are you paying for this growth? You're paying, woof. You're going to pay 100 times for that growth, 94 times. But look at that. Price to earnings growth. Look at that. Okay, sales growth, 94%. Paying 94 times times forward earnings, times thing. Be a little more professional, Brian. All right, price to book, mega high for something like this. This is mega high. That is blistering. Price to sales, 12 times. That's a lot. Operating margin flipped. And is this? Could this have been why that market flipped so dramatically? I would say so. So, when we take a look at the price here, so we saw in that much smaller time horizon, which would be the most recent beat, and then jolted higher, which is great to see that we want to continue on with that pattern. So what we've got here is a stock that has beat and went from margin negative to margin positive, and that sort of thing is something that we love to see. As we can see when we talk about this from the other video here, you see how these earnings lines are ahead of the others, and that's what's keeping this stock moving on an upward trend. So where is it going, Brian? Where is it going? My crystal ball says this stock just keeps on going, especially if multiples or if margins just went positive. So keep this one on your radar screen. This one is Celsius, CELH. Well, that was a lot of fun. I'm glad that we got this chance to share these ideas with you. Now, make sure you go to Zacks.com/promo to check out all of our recent promotions.